This is our second workshop for the VC Club for this year. The first workshop on the digital assets, where we will be focusing on regulatory and legal matters, as well as accounting, valuation, audit matters. I polled all the VC Club members on digital assets and an interest in having a series of workshops on digital assets. I got the positive feedback, and one of the reasons why I brought this up and suggested that we have a series on digital assets is as a venture capital investor focused on what will happen over the next 7-8 years. That's usually the term horizon that we invest at, right? We firmly believe in a world where assets in general will be issued in a drastically different way than they have been issued in the past and up to today. And that includes not only assets that are endogenous to a particular protocol, i.e. crypto assets that live within a protocol, right? But it also includes assets that we know fairly well, financial assets, equity, debt, derivative, structured debt, and so on and so forth, and physical assets, real estate, amongst the most important. And indeed, there are trends, first of all, experimentation in the crypto world, but there are trends seeping into the fiat world where we are starting to see assets being tokenized once they're issued, or at the time that they're issued, and or fractionalized, with a greater richness of representation for where that asset lies, and also a richness of corporate actions that can be taken off of that token. And it is indeed Middle Game Ventures' belief that asset managers on the buy side, but also sell side and service providers, right, will have to adapt to a world where these assets are tokenized and issued differently. And from that perspective, I think that those workshops on digital assets will be a good introduction for the challenges that we see for adoption, because things are not going to be adopted immediately, but also the opportunities going forward. So without further ado, today's workshop, we have Laurent Massinon from DLA Piper in Luxembourg, who will speak to us and educate us on legal and regulatory issues. And then we have Romain Swertvaeger from EY Luxembourg, who will tell us all we need to know about accounting, valuation methodologies, and audit issues pertaining to digital assets. So again, right, today, when we talk digital assets, it's mostly about crypto assets. But tomorrow, it will be way more than that. It will be a whole different classes of assets. Having said that, I'd love for Laurent and Romain to introduce themselves very quickly. And then once we're done with introductions, we'll have Laurent, who will launch into his presentation. And then Romain will follow with his presentation. And then we'll open up the floor to a Q&A from the audience. Laurent, Romain.
Thank you, Pascal. So on my side, I'm partner at DLA Piper in the finance projects and restructuring team. I'm dealing with financing matters, banking matters, and also capital matters on the regulatory side, but also on the transactional side. For a few years now, I've been involved in digital assets matters, and in particular on the regulatory side.
And myself, thank you, Laurent. And myself, I'm associate partner at EY Luxembourg within the fintech practice. So I'm réviseur d'entreprise agréé, and I'm focusing mainly on audits of entities governed by the payment law services, but also on digital assets and blockchain related industries for the past 5 years. And I'm also part of the various initiatives at EY Global around the development of audit methodologies and so on around digital assets and blockchain.
Thank you.
Thank you, Romain. So my part will not last for more than 15 minutes. I will touch base on the legal and regulatory aspects linked to digital assets. First, let's start with the definition. So digital assets, it's clearly a digital representation of value, including a virtual currency that can be digitally traded or transferred. Can be used for payment or investment purposes. And we can see from the definition that you've got on the screen that financial instruments or payments are clearly excluded from this definition. This definition can be found in the law on anti-money laundering and terrorist financing. So this law started in 2004 and has been amended several times. And digital assets has been brought within the scope of this law with the implementation of the 5th AML directive. And so it's quite important because I remember.
Can we, Laurent? Can we get to the slide? I think we're still on the on the main slide. Thank you.
Yeah, so I'm still on this slide linked to the definition because it's really important to understand the full scope of this definition. So the definition is very important and has been introduced with the implementation of the 5th AML directive. And as we saw, some instruments like financial instruments are excluded. E-money instruments are already excluded because they were already covered. If we go back to the topic of today, so digital assets for venture capital funds, we can take just a basic example, the typical structure that all of us are familiar with. So you've got a partnership, and this partnership, we will see LP, so the limited partners providing capital contributions to the fund, and the GP, so the general partner of the fund, will invest these monies in various type of projects. So we can see, and all of us for more than, depending on the practice, but 10 years, 15 years, or 20 years, that the fundraising linked to a VC capital is quite, let's say, burdensome. And the purpose of digital assets in terms of advantages is really to streamline this process. And the main item, and we'll see that through the whole value chain in terms of capital raising, it will have clearly an impact on the investors, but also an impact on the fund itself, and also on the projects, i.e. most of the time it will be startups. And it's important now these days for those startups to have access quickly and easily to capital. So we can see that digital assets first will streamline the fundraising process. Why? Because it will allow to touch more interesting investors, so you can have a broader investors base. So it's quite important because more investors you have, more liquidity you will have within the fund. And if you've got more liquidity within the fund, it means that you will be entitled as an investor to liquidate your position quite quickly. The same for the exit, for example. Most of the time, if we say that you've got an investment time of 10 years, let's say 10 years, and after 2 or 3 years, you want to liquidate your position. Now, these days, sometimes it could be quite tricky because there's no liquidity. With the digitalization at the level of the investments, it's much more easier to find new investors and to get out the structure. It will also ease the interactions between the LPs, and also, as I said, more investors you have, more also you can lower the amount of the ticket. For example, if you say the ticket will be at the value of 1 million, if you've got plenty of investors, you can lower the amount of the ticket. So it's quite important. And as I said, the purpose really to give more access to startups, and more access means also more ventures, more innovative products, and more jobs. So it means for the real economy, this tool is really important. In terms of legal and regulatory matters, we can see that at 2 levels: what could be issued by the fund itself, and also what can be invested by the fund. So if we take at the level of the issuance, quite likely, typically we've got 3 types of tokens. We've got what we call the payment tokens. The payment tokens are clearly what you have heard and what you can hear all the time, Bitcoins, Ether, those type of things. Normally, they've got no legal tender, except if a state starts to recognize the legal tender of these payment tokens. We saw that, for example, last year with Salvador. Salvador decided to give a legal tender to Bitcoin in their own country. The second classification is really the utility token. So it's kind of a token that will give you a right for consumption, for utilization. For example, the typical type of utility token that you will see, it's the voucher, electronic voucher. And so it's quite important also to note that those two types of tokens will be captured by the MiCA regulation that we will see in a few minutes. And the last type of token that we will show is the asset-based token. There are different names. You can see also sometimes security token, tokenized securities, but I think the name asset-based token is much more better because in fact it will give you a profit right or a right to benefit to a company or whatsoever. So typically, for example, if you've got a security token, it's quite clear that the security token, despite the fact that this token will be captured by the prospectus regulation. It means that the security, in such a case, if you decide to offer the security or those securities to the public, you will be obliged to prepare a prospectus and then to have this prospectus approved by the CSSF. So that's quite simple, and also something to mention. For a few months now, it's also possible to list security tokens. And I say to list, it's a listing without any trading. It means for the Luxembourg Stock Exchange, you can have some security tokens listed on the securities official list, but you cannot trade them. So it's I think it's quite good because as usual, the Luxembourg Stock Exchange try to stick to the new technologies, and I think for our clients or for investors, it's important to know that this possibility is there in Luxembourg. So we just saw what can be issued by the fund itself, and now it's time to move to the investments themselves. So, for example, we'll have a fund. Let's take an alternative investment fund. This fund would like to invest in digital assets, and we'll see what would be the situation, especially in terms of regulatory matters at the level of the fund itself, at the level of the IFM, and also at the level of the depository bank. And we'll see also various considerations such as AML and the new type of providers that are regulated since a few years, what we call the VASP, and the new projects they are in the pipeline at the level of the EU Commission, so Pilot and MiCA. There are two proposals in terms of regulation. So investment to be made by an alternative investment fund in digital assets, it's totally possible. But once again, it will impact the strategy of this fund. So it means that the investment strategy should be really tailor-made. Investors should be also informed. At the level of the investment fund manager, once again, those type of IFM that want to do that, they need to obtain a new license from the CSSF. So it has been done already before the new position published by the CSSF a few months ago. It was done in July for the first one. And in terms of constraint, there are plenty of various constraints. Of course, I'm not going to touch base on that right now because it's the time frame is rather short. But plenty of players start to collect all of the documents that they need to update the policy, and some of them started already to file the application with the CSF, and others are in the pipeline. We've got also the level of the depository. Once again, the depository bank is a key player in this type of structure, and for this entity, they will also have to touch base with the CSSF. And just to make sure that in terms of internal governance, everything is taking into account for the digital assets, and also in terms of management of risk and all of those things. So there are plenty of work for those two key players. As you know, since the implementation of the 5th AML directive, we've got one new regulated entity, what we call the VASP. So the VASP is the Virtual Asset Service Providers. So this entity is quite important because if you provide some services linked to digital assets, for example, if you provide service to exchange fiat currency against digital assets, digital currency, or exchange between different digital currencies and all of those things, you need to be registered with the CSSF in Luxembourg. And also, you need to file plenty of documents. You need to have a fit and proper test at the level of the management of this entity. And so it's we see more and more players applying for this type of license. What we have in the pipeline at the level of the EU, it's the pilot and the MiCA regulations. So I'm not going to develop more on pilot because it's more linked to infrastructure, like for MiFIR, for financial instruments, but MiCA is really important. And MiCA, it's markets in crypto assets. You can see just by having the name in front of you, that's quite similar to MiFID, but it's just for crypto assets and digital assets. And in terms of document itself, so it's still a proposal, but we can see that it's they took some part of the prospectus regulation, the market abuse regulation, and MiFID. And the purpose is just to make sure, for example, if you are a player, you can be regulated in one country, and then you can passport your activities in the other countries. Also, in terms of tokens that will be captured by this regulation, as I said, security tokens will not be captured by this regulation because they're already captured by the prospectus regulation. But if you start to issue certain type of tokens, you will be obliged to put in place a white paper. So white paper is rather similar to a prospectus. It means that you will have a description of the issuer, you will have some risk factors and all of those things. So we can see that what they did at the EU level, it's quite similar to what was done for the prospectus regulation and for the other parts of regulation. And we'll see what will be the outcome, because some provisions of the MiCA proposal are already out of date, because as we know, the technical evolutions are there, and it's not always possible on the legal side to stick to those innovative thinking. I think now it's time to hand over to Romain.
Thank you, Laurent. Thank you, Laurent. So yes, so I will cover now the auditing, accounting aspects, so including also I put as part of the auditing aspects also the valuation aspects. I will cover briefly, but which may somehow require more time, a session with more time due to the complexity of the valuation issues around digital assets. So to start with accounting, so with accounting of digital assets as of today. So what we have on the screen now, it's the various IFRS classification which can be applied to digital assets. So I will cover only a few of them, which are the most important. So the financial instruments, intangible assets, and inventory, and I will explain in each case. And I will explain which relevant case apply to each of the accounting treatments. Maybe to start with cash and cash equivalents, just to take it out of the way. Even though this has been considered by the International Financial Reporting Board at IFRS level, what we know is the cash and cash equivalents as of now. A digital asset cannot be recorded or cannot be recognized as a cash and cash equivalents, at least as of today, for various reasons. Because even though some countries have adopted, so as you mentioned, Laurent, for Salvador, Bitcoin as a legal tender, as no legal tender in Salvador, cash and cash equivalents is, as of today, not relevant for digital assets, because we cannot conclude or we cannot apply to digital assets the three criteria which are applicable to money, which are the medium of exchange, the store of value, or the unit of accounts. So they don't fulfill the three criteria, which means that under any gap, so IFRS or Lux gap, you would not recognize a digital asset as a cash equivalent. So this one has to be taken out of the way. If you go, or we can go directly to the next slide, Laurent. Okay. If we go to the digital assets as a financial instrument, we could use a parallel for a security token, meaning that a financial instrument under IFRS or Lux cap will define financial instruments as as a contractual right to a residual interest in the net assets of an entity. So meaning that it could be apparented to shares, for instance, in affiliates and so on. And therefore, you could, if this meets the criteria, you can recognize digital assets held as a financial instrument. So this could apply to investments a VC could do into equity of an entity and get an equivalent of shares denominated, let's say, in a digital assets, which starts to be more and more common. In terms of valuation, of course, this has impacts, because you would recognize such assets at fair value, and fair value through profit or loss under IFRS. Under LuxGap, you have the possibility to use either the cost or the fair value option. So the fair value option, which would be similar to the accounting treatment under IFRS. So it's important to when you decide, or when you are an entity, when you decide to go for an accounting treatment or another, it's really important to understand what are the feature of the digital assets itself. And the financial instruments would fall either if you get to a participation in an entity, let's say, or if you also apply it to derivatives. So derivatives can also be applicable to be recognized as crypto derivative, could also be recognized as a financial instrument. So we can maybe go to the next slide, Laurent. Provided that the digital asset is readily convertible to cash, or the contract could be settled net in cash. If not, this would not be fulfilling the criteria of a derivative, but this can be, and we see now some digital assets derivatives coming to the market. So it's also, it would also be recognized as a financial instrument. And again, this again depends really on the use of the digital asset. If we move on to the next slide, which is quite important also, and I think which will become more and more important in the future, when we say digital assets held with the view of resale, we say that you could have a broker-dealer type of activity, or you could be, let's say, a fund performing high-frequency trading and so on, and buying and selling crypto assets. And in this case, in this particular case, you would be required, or under both IFRS and LuxGap, you would be required to recognize such digital assets as an inventory, which may seem odd, but this is really the way which has been taken by the IASB for the IFRS. LuxGap has followed as a proxy for IFRS, and of course you would apply the recognition criteria for an inventory, which is under LuxGap LOCOM, so a lower of cost or market, and under IFRS a lower of cost or net realizable value, which would require on a year-to-year basis to perform, a review, kind of impairment review of the value of such assets. So again, this is really linked to the use of the digital assets, which would drive potentially a recognition as an inventory under IAS2 for IFRS and as an inventory under LuxGap. If we move on to the next slide, so the next slide may be less of importance for venture capital funds, even so. Now, this is a recognition of digital assets. We would say under IFRS or LuxGap to acquire goods and services, but this could well be you are a venture capital fund and you hold USDC, for instance, and tomorrow you plan to acquire shares of an entity through USDC, and if you go that route, you would need to recognize these digital assets as an intangible assets, because the use of these digital assets would be for the purpose of acquiring. This would not be per se a good or service, but in parallel, this would be to acquire a good or service. And therefore, you would need, and again, both under IFRS and LuxGap, again, you would need to follow the recognition principle of AIS 38 for an intangible asset, which is, or you can have under IFRS both the revaluation model or cost less impairment. In Luxembourg, you would use only the cost less impairment, but this is also a possibility accounting-wise offered. So basically, as of today, just to summarize, you have really three classifications, which are financial instruments, inventory, or intangible assets, and this will be really determined based on the use of these digital assets. So either a security tokens would fall more under the financial instruments, a derivative, of course, a crypto derivative, of course, would be recognized as a financial instruments. If you buy a crypto in the view of resale, of course, this would fall under an inventory classification type. And if you use a digital asset, or it could be a crypto or a stable coin to get a benefit or for the purpose of acquiring the control of goods, service, or of shares in affiliates, for instance, you would fall under the category of intangible assets. So basically, the overall classification is still evolving as of today. This may still evolve in the future. I think we are still, it's digital assets are still new assets, and the various boards around the world are still evaluating which could be the best, or the most suitable accounting treatment for such assets. But this is as of today the way this should be, the road this should be followed. But this may, of course, evolve over time. On the next slide, I think we are still on the intangible assets. So I think this is really, that's what I've said around the measurement. So this was in a nutshell what are the important takeaways in terms of accounting. But it's important to cover them before we go to the auditing and valuation aspects. For the auditing and valuation aspects, I will do a parallel of my activities as auditor and also what a VC fund could be or would be required to do as part of its investments strategy. So myself as a resident entreprise, I will have a few aspects I will really focus on when we audit. Can be a crypto exchange, it can be an investment fund investing in tokens. It's first the valuation aspects, which is the most critical. So of course the under valuation of digital assets. So there, what really matters is to understand if a digital asset is liquid, yes, no. And depending on the liquidity of these assets, you will of course audit it, but you will of course as an entity or a fund consider it differently on a valuation perspective, meaning that if you take liquid digital assets, you just take Bitcoin or Ethereum, what's a good proxy to value such assets can be a quoted price, because this is traded extensively, and a quoted price, you would, myself as an auditor, I would base such valuation on either source of information or either source of information such as CoinMarketCap, blockchain.info, or either crypto exchange, which are regulated, mature in terms of profile and so on. I'm not going to mention any, but we have of course famous players in the market, and we would of course for this type of liquid assets based valuation on either a quoted price, which is the easiest, or on based on comparables of comparables of digital assets versus other digital assets. If you are in a case where you have less liquid assets, where we see now venture capital funds sometimes investing, now you probably need to use, and what we see, it's you probably need to use valuation techniques. So this can be valuation techniques such as DCF, a typical DCF, comparables also. You could use also a milestone approach, which may seem strange, but a milestone milestone scorecard approach could be also acceptable, as you could do in evaluation of an investment when you are a venture capital fund, or using also trailing daily volumes minus a discount. So you have various ways to do. To go through each of them would be very long. I think this would deserve another full session. But the first steps to really consider it's liquidity versus less liquid assets. And liquid asset, of course, will be much easier to value because you will have access to quoted price. But for illiquid assets, you will VC fund may need to develop some valuation techniques to derive a price which is closer to a market value rather than taking a quoted price on an exchange or a quoted price on a CoinMarketCap or blockchain.info. The second aspect, which is important, it's around existence. Existence, I can also mix it with the custody aspects, because when you are an auditor, but this will apply also for a VC fund. When you are an auditor, what you try to validate as a first step, it's does the crypto assets an entity have in its balance sheet or as of balance sheet commitments, because we have both cases. Do these crypto assets exist? And you have, of course, various ways to do so, but the first step is to understand the way you custody them. So do you self-custody or do you use a third party to custody such assets? So if you self-custody, of course, you need to, if you self-custody for a VC fund, this is easier. You have either software wallets, either hardware wallets. You can, of course, rely on. You have a list of address, and myself as auditor, I would call to the team and check, of course, that the completeness of this wallet addresses, and cross-check the data through either a blockchain explorer, through blockchain explorer. So you could use blockchain.info, Etherscan for Ether, and so on. If you use third-party solution, what's important to know, if you use third-party solution, it's always important to obtain from them confirmations letters, or at least account statements on a wallet by wallet perspective, just to make sure that you have the ownership over these assets, and that these assets are really recorded on public addresses. So as auditor, what we do when we have these cases, we always send confirmations similar to bank confirmations to have these balances confirmed. An important point to know around existence, around existence in custody, it's also the controls as an entity you put in place to manage these assets, meaning, so if this is a self-custody, who are the team members who have access? So who are the type of access you provide to the management to move potentially crypto assets? So, and if you use a third-party custody, you would have similar cases where, of course, you have the third-party custodian performing the custody on your behalf, but of course, you will have the same mechanism in terms of controls. So who are, because you of course cannot have one single, let's say, manager having access to the crypto wallet. So you will need to define a framework to handle such wallets, to ensure that there is no risk of misappropriation, basically, which is an important matter. There is there is always other important takeaways, which could be what type of controls you put in place as an entity. Also, if you outsource these activities to a third party in terms of reporting KPIs and so on. So in terms of outsourcing policy, you would, as an entity, put in place to make sure that these assets are safeguarded in a way which is safe and secure anytime. So that's in a nutshell for existence what we perform as auditor. But it's important also for for a VC fund either to have such controls, either to have reconciliation, confirmation controls, just to make sure that at any time you have control and access these digital assets. Two other aspects are still important around completeness. But completeness, you could mix it with existence, and as I said previously, in terms you would relate it to the reconciliation confirmation process you have to make sure that you have the control and the full ownership of these assets. AML CTF is quite important now also, especially if as a VC fund you would use third-party exchanges to carry out your trading and so on, or third parties to carry out your sell and purchase of crypto assets, and the policies you put in place and the due diligence you put in place on third parties which would perform that on your behalf, and also yourself as a VC fund in terms of controls of on-chain activities, if you are in that case, and tools you could use such as Elliptic, ScoreChain, or whether to monitor the transactions and also the counterparties with you exchange, basically. So that's really in a nutshell the few important aspects to consider audit-wise. But when you extend from an audit standpoint, this is also, as a fund or a VC fund, this is also the typical areas you would need to focus on, just to make sure that you have full control and ownership on your portfolio, of course, that you value it on the right manner, depending on the liquidity, money on the liquidity aspects related to this to the various digital assets you would own, and also on under cyber security areas, which are also important. But this you would link it also to the way you custody such assets, basically. So that was in a nutshell, what I could say around accounting and auditing aspects.
Thank you very much. I have a whole host of questions, but first, let's see if the audience has questions for either Laurent or Romain. Raise your beautiful virtual hand so that I can see you. Anyone? I can call also. All right. Well, then I'll ask a few questions myself, right? So you mentioned different types of tokens, security, utility tokens, and so on and so forth. There is such a thing as a governance token, or token that allows you to vote, or where there's like a particular use case that is associated with that token, right? To vote on a protocol. Where does that lie? Is there a distinction that is made, given that that token would give you like certain rights that could be viewed as economic, because you may vote on certain aspects that are being proposed on a protocol, and that may have an impact on your economic interest for other tokens or ownership that you have in that particular protocol?
Yeah, so basically for what we call the security tokens or the tokenized securities, for sure, you will have quite likely the same features, but once again, it has to be analyzed on a case-by-case basis. But for example, you will have the same features as debt securities or equity securities. And in such a case, of course, you will have economic rights, but you will have also some voting rights on different features that are similar to shares or bonds on the other side. It's just the format that is totally digital, in fact.
I see.
Yeah.
Okay. Then there is a, from the same token, without any bad pun, we've seen, for example, contracts and protocols that are synthetic. They basically replicate a financial asset that is maybe quoted, publicly quoted on a stock market. How do these types of synthetic tokens or contracts are handled, both from a legal point of view and from an accounting point of view, if it changes from what you've just explained to us?
Yeah, perhaps I will start and Romain can complete afterwards. As I said, for example, for security tokens, you can list them, but it means that so far you can have no trading behind it. For example, as I said, it will be listed on the securities official list of the Luxembourg Stock Exchange, but you cannot go on the regulated market or on the EuroMTF market. So it means that because of the clearing systems that are behind, such as Clearstream, Euroclear, or DTC in the US, it's still not possible to have a trading through this mechanism. But of course, by having a listing on the securities official list, everything is published. So it means that investors have access to all of the data, and afterwards they can trade between themselves.
Well, in accounting wise, this would fall under the category of financial instrument.
Oh, so a synthetic contract token would be a financial instrument, and okay, that makes sense. You mentioned stable coins like a USDC. At least you didn't mention USDT, so thank you. Given the risk associated with that, which brings me to whether it's for stable coins that would be used as treasury to kind of like, you know, invest in like other virtual or digital assets, which leads me to the use cases of either staking the tokens that you have invested in, or quote unquote lending them to get some yield. So first part of the question is that a no-no for a fund? Because that implies like some type of regular income as opposed to capital gains at some point. And then second, if it's not a no-no because of like some unknown reasons, how would staking and you know, any yield activity be treated from a tax and accounting perspective? Again, assuming that the legal aspect has been cleared.
I don't know, Romain, if you want to start or.
Well, accounting wise, staking. If you get a reward or a yield from staking activity, this would need to be further analyzed, because again, this is really new, and I'm not going to give a very straightforward answer or a very clear-cut answer, but you could fall in a case where you would recognize such rewards as a revenue if it fulfills the criteria of revenue recognition. Potentially, the stake tokens themselves, they would fall into balance sheet categories, let's say, but rewards would be analyzed under the revenue recognition standards.
Laurent, anything to add?
Yeah, perhaps I can complete on my side, but if we go back to the VC funds, basically the tokens to be issued by the fund will be quite similar to what we can see, i.e. limited partner interest or units. And as I said before, the features will be exactly the same. Afterwards, for stablecoin, it should be checked on a case-by-case basis. What is the type of fund, what is entitled to be issued by this fund, to know, for example, if you can issue a stablecoin or not. But for example, in such a case, you can take a normal company, and just to make sure you need to process with the regulatory analysis, just to check whether you need to have some regulated entities coming into the game. And quite likely, what we can see so far, the VASP is coming more and more, because you need to deal with the exchange of those stable coins or payment tokens or whatsoever. Sooner or later, you need to convert them in fiat currency.
Yeah. Let me rephrase my question then. Obviously, there's like the part which is the fund itself, which issues tokenized LP interests. So that's one thing. I'm focusing more on like the fund investing, right?
Yeah.
So in the traditional fiat world with my current fund, for example, I seem to remember, and I hope that I don't have a faulty memory, that I was told at some point by service providers that, oh, you're a venture fund, you should avoid having income, i.e., you're not going to invest in debt instruments that give you a yield, because then you're being treated in a somewhat different way from a tax perspective. Everything has to be like capital gains in order to remain on the right side of things and not avoid complications. So if that is correct, then once you go into virtual assets, and some of these virtual assets, may provide some yield, or if you stake them, may provide you some reward that is by definition not capital gains. Is there a risk, from a tax perspective? Or no, it's just a matter of like, you're recording things differently and you can do whatever you want as a venture fund.
I'm not a tax lawyer, but I would say that normally it should follow the same reasonings as you had for the fiat currency or fiat investments or whatsoever. But it should be checked with your tax advisors. Yeah.
Not a tax advisor either, but I would say the same. So.
We should have brought like a tax advisor as the third speaker then. Okay. The last question that I have on what I would call that treasury, basically, an amount of value that the fund has called and keeps, so that the fund is able to make an investment, right, in a new token and a new protocol. So is it safe to assume that that treasury should not be held in a cryptocurrency, i.e. Ethereum, because there's like, volatility? And aside from like the potential loss of value, there's like implications for the capital gains loss and the revaluation of that Ethereum position. And rather, the fund should seek something that is more stable, i.e. a stable coin for that treasury. Is that a correct way of like thinking about this? And again, I'm not talking about the commercial implications. I'm talking about like, from an accounting valuation and all that stuff.
From an accounting perspective, of course, if you invest in a stable coin such as USDC or any other, of course, gain or loss of value should be and the potential impairment or upward value should be less significant. Having said that, if you invest in Ethereum, of course, you will have to reassess. Let's say if you have in portfolio Ethereum, you will have to reassess at year end indeed the impairment of this, the potential impairment of this Ethereum, meaning that if you buy it, if you purchased it for 100 euros, I'm just saying something which is completely out of range, but you buy it today for 100 euro, but at year end this is worth 20 euro. Indeed, this will have a high impact on your P&L because you will recognize an impairment loss of 80 euro because you will apply the costless impairment.
Okay, I have one last bonus question, but I want to make sure that everyone else in the audience has a chance to ask a question. Anyone? All right, here's my bonus question then. You mentioned, or I might have inferred that you were mentioning that some of these tokens, some of these digital assets could be viewed as like ownership in, I heard the word like ownership, right, in something. So is that the same as saying that these tokens are like, or these virtual assets could be viewed as like quasi equity?
No, if you have tokens or crypto assets, you would. Let's say if you invest tomorrow, you will need, of course, to determine the accounting treatments. And when I say ownership, I think it's more in this way. It's more to say, if you invest tomorrow in a crypto asset, if you have investment in crypto assets or tokens as an investment, you would recognize, as I said, through the three classifications, but that doesn't mean this would trigger a classification as equity investment. So this could happen though if you invest tomorrow, let's say in a third-party company. It can be you can invest in cash and get back shares which are denominated in a token which is underlying to the project there. Yes, this would be an equity investment, obviously, but this is really the only case, at least for now, where you would have the situation. But if you invest tomorrow in Bitcoin, Ether as an investment, you will follow the classification as a typical balance sheet item. So basically,
yeah, of course,
in cases, it would be intangible inventories, or even under LuxGap, we could still argue for another investment classification, depending. But that's
Yeah. My question was not relating to obviously Bitcoin or Ethereum or any of these layer one currencies or assets. It was more on like tokens.
It would follow the same. It would follow the same route, but it would follow the same route.
I see. And to be more specific, right? The with a VC fund that has that is treated under the AIFM classification, right? To my knowledge, there is no constraints to what type of things that a VC fund things, i.e., investments that a VC fund can make. However, if a VC fund has a UVICA license, I do believe that the UVICA license specifies that a VC fund has to invest in equity or quasi-equity. So in that case figure, how does one come about and ask a service provider to issue a letter that token that they're investing in is quasi-equity to fit that UVICA license?
I'm not a funds lawyer, as you know, but once again, in terms of, it's always the same type of approach. You need to check according to the UVICA regulation what type of investments are allowed, and based on that, you check whether you can invest in a quasi-equity or quasi-equity in the form of digitalized assets, and it should be checked. It's always, as I said, the same type of reasoning, because the layer that we have is just a layer of digitalization. But by the end of the day, we didn't start to create new type of characterizations, qualifications, or whatsoever. And I remember when we had, it was 6 years ago when we started with the ICOs, the initial coins offering. And at the time, it was the FINMA, so the Swiss regulator, that was the first one on the ball to try to put a frame on how to deal with the different type of tokens. At the time, they took the approach not to create a new legal framework, but just to use what was done, the current legal framework, and to adjust based on that. And it was done also afterwards by ESMA, the qualifications of the three type of tokens that I described at the very beginning. So for UVICA fund, I think it's the same way, the same approach. Just that you think in the way of traditional assets, and then you try to apply that to digital assets if it's possible afterwards. Yeah.
Thank you for that. If we don't have any questions from the audience, and I think that we've arrived at the end of our hour, and we'll
I have a question, if I may, Pascal, to Laurent,
yes.
actually.
Well, there we go.
Sorry, Laurent.
I thought it was for Pascal, but no worries.
No, it's, for a VASP registration, for crypto, there is new activities coming in, and we know there is a VASP registration as for now. Mm-hmm. Crypto lending activities, would they fall under the scope of a VASP registration? I know it may not be an easy question, but
no, it should be double checked, and it's a good question because so far the type of activities that can be undertook by a VASP are clearly described in the AML law, and I'm not sure whether this type of lending activity is really foreseen as such.
Me no, but it's
But lending activities, once again, it's regulated, but you've got plenty of exemptions. So I think it's possible to fall on the banking side, the banking monopoly side, on an exemption. But afterwards, when you deal with crypto assets, you need to have the VASP status. So afterwards, whether in terms of scope of activities, it can be put inside the scope of the activities of the VASP, I can double check. Yeah.
Thank you.
Yeah, that is actually an excellent question, I have to admit. I don't think that, with my limited knowledge, like crypto lending as in undertaken by a VC fund, probably there's less friction. Crypto lending for a protocol that a VC fund invests in, that's like a different matter. And from what I've heard, the workings that are going through with MICA and with the European Union, right? You have the banking lobby that is pushing really hard to exclude any type of lending and savings and yielding, much like it was done with the payments initiative when that was excluded for payment service providers. So that's like definitely the crux of the argument here. All right. if Laurent doesn't have a question for Romain, then
no, that's on my side.
Not for now, at least.
Then thereby is this first workshop on digital assets arriving at its end. I'd like to thank Laurent and Romain for their contribution and their hard work preparing and coming up with the presentation. Much appreciated. And I hope that this was instructive and educational for all the participants. And obviously, thank you to the LPEA team and LPEA team and Luis for having organized this for all of us. Thank you again. Luis.
Thank you.
It's been a pleasure.
Thank you. Bye-bye.
Laurent,
Thank you.
Romain,
Thank
and
you.
everyone. Thank you again and bye-bye.
Thank you. Bye.
Thank you. Bye-bye.
Bye.